Hey, it's Mike with PriceActionTradingSystem.com, and it is Wednesday. It's May 24th. This will be our chart listing for the day, and a rather lethargic day. By the time we got any movement, the day was pretty much over, and this is typical of what you might see um, on a FOMC day. A lot of times the market will get flat like this. Usually, it's only an hour or two before you go um, into the news item, maybe the hour or so before. But in today's case, it really started right out of the gate and lasted all day, right up into the news item. And then we got a little movement once the news came out. But as lethargic as this day is, these days are easy. They're very predictable. And the key is just buying the lows and selling the highs. And if you did that every time here, um, you'd have probably made money. If you just waited till it got to the low, the only one that probably wouldn't have worked, and again, if you waited on a higher low or a lower high each time, or a double test rule, every one of them would have worked. You wouldn't have had any that would fail. And I mean, that's high probability. So I like these kind of days. These kind of days will really chop inexperienced traders that don't understand how prices work. It'll chop you to pieces. But if you understand what's going on and you know that you only sell the highs and buy the lows, just look at it. I mean, it's pretty simple. So obviously, it's easier to look at it after the fact, but this is predictable. You can predict what's happening here and what's going to happen here. So um, at any rate, I like these kind of days, and no more movement we had here. I still had a pretty decent day today. So, and if you understood what was going on, you should have had a good day too. But if you didn't, then you need to study this chart and understand that on a day where things are flat like this, the key entry points are selling the highs and buying the lows of the range. And here you had the little failed break lower, and once again, if you caught this, you catch a major low, and you could have ridden this all the way up into the close, at least till the failed breakout up here, and then it comes back and gives you a higher low and takes off again. Um, so we'll go over the trades and we'll wrap it up. But yeah, I like these kind of days. Like I said, they're very predictable, very easy days if you understand price action, you know what's going on. And if you go back and watch my videos forever, you'll hear me say that about range days. I like these kind of days because they are so predictable and fairly easy to trade. But anyway, let's talk about the trades. You had to be really patient. The first trade didn't occur till almost 9 o'clock, and sometimes that's hard to do, and that's where people get tripped up. They get impatient, but there's just no action. There's no volume here. There's no volatility at all. So you got a little two-tiered channel working up, but you had two legs up, basically one leg, a little correction, second leg, and then you had a little correction, and then you just went sideways. So this was the first break of this channel working up. This has all the makings of a range type day. I stated that at 9:20 or 9:30 this morning when I put out the midday chart of mine. Just generally, generally you'll see me give my predictions on the type of day, and it's not always 100% because I'm not always exactly right. You don't have to be 100% right. You just have to follow the price action, but it helps to kind of know what type day to expect. And when you're expecting this kind of day ahead of time, it makes it a little easier. And people say, "How'd you know it was going to be a range day?" Well, when the regular once we hit this white area, which is regular trading hours, that's your 8:30 open right there. Once you hit those regular hours, basically, um, if prices are still trading inside the overnight highs and lows, that generally will tell you it's probably going to be a range day. If we break out and we're suddenly trading above that into the white area or below that, then it may be you may get a trend in that direction, or you might even get a reversal or whatever. But it's pretty obvious that we were probably going to have a range type day today by 8:30 and 9 o'clock because there's very little volume to begin with, And how do I know that? I don't have any volume indicator. You don't need a volume indicator. You can tell the volume by looking at the chart, by how few bars there are. And so everything you need is in this price action. You do not need indicators. You don't even need a volume indicator. It's all in the price action. You just have to get used to seeing it and understanding it. And you have to get experienced with this chart. And the only way to do that is to take everything off of it except your support and resistance and your trend lines. And this EMA. The EMA is important in my opinion. And that's another clue that this was going to be a range day pretty quickly, was because when prices are steadily going above and below, and the EMA is flat, that's a range. It could be, you never know. A range can be as big as 2 or 3 points or small as a point, actually. I've seen ranges that are just like this right here that go on for hours, and no bigger than that little congestion area right there. This one happened to be, I'd say, we just call it 2397 to 2400. So it's about, it's basically 3 points, I would say. That's what I would call it. So there's enough room in there. As long as you get in low enough down here to get out up here, you're probably safe. Just wait on a high or low off the bottom, or a low or high off the top, or a double test rule, one of the two. So anyway, let's move on to the trades. But you got a little second entry long here. You're moving. There's actually 2 legs down already. But even on this chart, you're moving down. You get your first entry, then you go a lower high here. So that's a second entry, a fairly bullish bar. At that point, that's the first break of this trend line. So you're probably going to bounce and try to go for a retest. So I like that one for a long. It's kind of questionable if there's a close outside here. But I still think you got everything you need to take that long right there. Just trying to get a scalp. And then we make a lower high, and we come down, and you test this area once. You come back, you test it twice. But more than anything, you got a double bottom. At that point, I actually had this line right here. And you could treat this like a double test of this or a lower high. And so if you've got room to get out, you want to go long right there. And you do, just by a tick. So, and it works just pretty much to the tick. It actually comes back again first, and then you get a double test of that level. So when it breaks above this bar, I like going long right there. And it just, like I said, you get just enough, and that's why we go for 4 ticks. I mean, we've got this down to a science. The worst thing you can do is come in and start learning this, and then start trying to tweak it. Because trust me, we've been doing this for years and years, and we've already done all the tweaking and the testing and the hard knocks and learning the hard way and taking the losses, and we've got it down to a science. So just follow it. Don't try to tweak it. But anyway, you get a lower high here. That's a double test of this level, fairly bearish bar. Just go short right there. And once again, it comes back and gives you a lower high again. So I like adding on right there. As long as you got room to get out here, I like adding on. And so it gives you 2 shots to the bottom. And guess where it bounces? Right there. A really aggressive trader is probably going to go long right there. I'm not going to mark those because, generally you're going to wait on that high or low. And you get another opportunity right there. It actually turns down and goes back and goes right out the other side. Just go long right there, and then there's you another easy move, and it comes back and it tests this high again. And this is basically a double top that's lower than a previous double top. So this is still a double test of this double top. So that gives you enough reason just to go short right there. Another easy scalp. Then it comes down here, it hits the bottom. And this is a good example of why a lot of times you want to wait on a high or low, because it does go lower. But if you entered one stop above that, one tick above that one, you get a 1, 2, 3, 4. You still would have got out. 1, 2, 3, 4. Yeah, you still would have got out. So, but I think you're better off to wait on the lower high. And unless you get a failed break lower like this one. And you get that failed break lower right there. And that's a fairly bullish bar, even though it's got a little red to it. Just go long right there. And I will say, I know why I didn't mark that green before, because it was right into the 1 o'clock. That's inside the 12 o'clock hour. I wouldn't take that. just for that reason, because you may get stuck in this trade or you may get whipsawed. It still would have worked, but that's why I didn't originally mark it, because from right in here, I usually circle that, and I didn't today. Somewhere right in there. Let me find the noon hour was right in there. So from right about there, definitely right in there, I would not enter, even if I got a really nice setup, simply because it's into that news hour, that FOMC news hour, and those can be crazy volatile. So, I mean, even though this is not one of the crazier days, that's still a fairly volatile considering what we had the rest of the day. And even this one's questionable because it's only like, I think, 104 when that actually triggered. I don't know why I seem to have a little problem with getting this thing to show lately. You can see the time there is basically 105 on my Central Time. So that's 5 minutes after the news came out. But you can see there wasn't much happening. And if you wanted to take that trade, I'm okay with it. I marked it, but you may not have taken it just because it was 5 minutes into the news hour. But you can see, even I mean, I show this over and over, even when there's a big news item, the price action still works. You had a failed break lower, you broke out the upside, had a failed break, came back in, made a higher low, and then bounced. And once you started going higher there, if you're still in a trade, you're going to look for a measured move, just like so. And look, we came within one tick. We didn't quite make it. We came within one tick of a measured move there. So the price action still works exactly the same. I failed to talk about this trade, but you had a failed break. You got a lower high here, but you don't have a very good signal bar. So you need a reversal pattern, and you get that right here. So I wouldn't have any problem going short right there. It's good for a scalp, and then it turns up and heads for a measured move. And so real easy, predictable day. The only thing is I'd say is probably stay out during that news item there. But even if you traded it, I mean, it wasn't like you couldn't trade the news today. But the problem is you don't want to get short or long into a trade just before a big news item comes out, because you may get stuck in it until the news happens, and then because of the volatility of the news item, the move is a little bigger, and it's just enough to stop you out, even though the price action still works properly. Look how far prices fell before they reversed. So even though the price action all still worked out, if you would have gotten long right here somewhere or here and didn't get out, you would have got burned before it went where you thought it was going to go. So it's still important to, to just watch around those news items. Usually, especially something like FOMC, about an hour before time, I'm probably not going to enter a trade, just to be safe. Better safe than sorry. So, but as you can see, as I stated already, you can tell that the price action is still valid even during the volatile news item. So, learn to read this chart, learn our rules, learn to trust them. And that's the key, is most people can't trust them. They know when it comes down here they want to buy, but they can't trust it. And they watch it go, and they watch it go, and they watch it go. And then suddenly they'll finally say, well, next time I'm getting in. And they get in maybe here, and it doesn't quite go, or maybe here. This would have been a good example. There's a second entry here, but it wasn't quite to the low. But they might have said, okay, I'm getting in on the next lower high or the next second entry, and you get a second entry long right here, and you would have got burned. But if you would have just trusted it and entered all these other times, you probably wouldn't even need to be trading by that time. So learn to read the chart. First of all, you got to learn to read it first. It's not easy, it's not hard, but it just takes time. And then once you learn to read it, learn to trust it. You're going to be right You know, what we found is if you can read this price action, you're going to get it right 9 out of 10 times if you follow the rules. It's not 100%, and you might have 2 times in a row that it's wrong, but if you just take them all, you're going to find that you're getting it right 80 or 90% of the time, and that's plenty to make good money. So anyway, I've drug this one out long enough today, so I'm going to wrap it up. Hope you had a good trading day. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.